Hi, everyone. Gentili from Sarraf Gentile LLP. We are a law firm that focuses on life insurance disputes and lawsuits related to life insurance. So I'm a pretty strong advocate for the idea that life insurance, especially permanent life insurance policies, need to be reviewed regularly, every year, every couple of years, to make sure that the policies are healthy and that the coverage you have still makes sense in light of your life needs. There are some junctures that come up that I think warrant special attention. And one of those junctures is if you have the life insurance company that you have a policy with has merged or has been bought by another company. And that's been a relatively common occurrence, especially for some smaller carriers in recent years. And here's what happens that's concerning. So if the company that you bought your life insurance from, let's say that they're in a lot of other lines of business besides life insurance, like annuities or portfolio management, and life insurance is a relatively small part of their business. The company was probably bought out for assets other than life insurance. It was bought for its annuity business, let's say. When that happens, when a company is bought out and they're bought out primarily for the annuity business, but they do have life insurance policies on the books, those policies tend to get de-emphasized a lot. And what that could mean is that, especially if you have a universal life insurance policy, where there's a lot of variability in the cost and crediting of the policy that's in the, let's say, within the control of the carrier, or at least somewhat in control of the carrier. You'll see that the companies that bought the company will look to just kind of maximize what they can get out of that existing life insurance book of business. They'll raise the cost of insurance potentially. They'll raise expenses if they can. They will lower the crediting rates if they can. Basically, they're going to do everything to try to get what they can out of it, and also if they can get people to lapse their policies prior to paying a death benefit, all the better. So that's unfortunately a concerning pattern that we've seen. So if you know that you have a life insurance policy with a company that's been bought out, you need to really pay that much closer attention to the policy and all the moving parts just to see what's going on. And if it does look like there's been kind of dramatic changes in the crediting rates for the negative, or increases in cost of insurance, or other expenses, have an attorney look it over. Um, Life insurance policies will frequently give latitude to the carriers to change these things, but the carrier still has to operate within the parameters of the contract of the policy. And sometimes they don't. Sometimes they go outside of that. And if they do, you may have a claim and you may have the ability to get damages. So I would strongly suggest reaching out to a lawyer at that point, or a law firm like ours, to review it and see if there's anything that can be done to help. The final piece of advice I'd have is for people that haven't bought the policies yet. So if you're shopping for a life insurance policy, just keep in mind that hopefully this is going to be a contract that you're going to be holding for many decades. And you're going to want to make sure that the company that you're dealing with is they're responsible and they're trustworthy. One of the things you're going to want to see is that they really have a commitment to the life insurance business. That life insurance is not a secondary offering for them, but it's the main thing that they focus on. Companies where the main thing that they focus on is life insurance, the less likely they are to later down the line kind of sell themselves off and have that life insurance business be treated poorly. Whereas if it's a company that's known for doing other things, but hey, they sell life insurance on the side, those are really the contracts that seem to be most at risk for poor treatment in the event of a merger. So this is just a risk to keep in mind that a lot of people don't focus on, and certainly it's not a discussion I'd expect life insurance agents to have with potential clients about the risk of the company that you're buying the policy from selling itself in the future. So as always, if you have any questions, feel free to reach out, and I hope you subscribe to this video. Thank you.